please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, hello, you're watching Business Saturday on CNBC TV18. I'm Mangla Malu. We have a whole host of things to talk about. Our markets at record highs, Reliance quarterly earnings, Nouriel Roubini's comments on India, and most importantly, the US government shutdown. So first up, let's take it straight. Right, let's take it straight then to our big story. Quarterly earnings coming in from Reliance Industries, the oil to telecom major. They have had a solid third quarter with the net profit jumping 25% from year-ago levels. In its main petchem business, both cross-refining margins and the petchem margins came in along expected lines, but the bigger story was with their latest telecom venture, JIO as we know it. That one has turned in a quarterly profit for the first time, and this comes within just 1.5 years of its launch. 504 crores on the bottom line there. Our very own Naveen Shetty joins us now with a breakdown of the company's numbers. Naveen, JIO, that one's turned in a special performance this quarter, right?
On all parameters, Reliance has given a strong beat. So I'll begin with the most important point, as you clearly point out, that is JIO. So JIO has reported a PAT of close to 504 crore rupees versus a loss of 272 crore on a quarter-on-quarter basis. And even the EBITDA for JIO has come in at 2,500 crore. What has driven the growth? Clearly the operational leverage that has started kicking in for the company. Also the IOC charges which had impacted Bharti Airtel earnings, that seems to be not been a dampener for the RIL JIO numbers. The other important point to note out will be the petchem margins. Remember, the petchem EBIT has come in at 5,700 crore. The highest estimate on the street was close to 5,150. What has led to an improvement in the petchem margins? Clearly the product mix that has been improving. In this quarter, the product mix has improved toward the paraxylene versus naphtha, which has led to the overall EBIT margins improving as well as the volumes. The third important point being GRMs. Remember, we were expecting a GRM around the $11.6 per barrel. Bang in line is what the company has posted in terms of the GRMs. So that has also come in as a positive. The other smaller vertical, that is their retail vertical, over there the company has posted an EBIT of 487 crore. Again, this has come in as a sweetener because the overall, if you see the street expectations, the highest again year was around 375 crore rupees. So overall, this has led to a net profit of close to 9,400 crore. All these things, and I think on Monday itself we should see a dark green on this stock. Back to you.
All right, dark green on the stock. Thanks a lot for that, Naveen. Of course, a standard disclaimer on your screen. Network 18 and TV18, the companies that operate the channel that you're watching right now and you love, is owned by Reliance Industries. But let's move on to a CNBC TV18 exclusive now. India should continue with the reforms initiated by the Modi government, and it should increase the pace of reforms if it wants to accelerate the pace of growth to 7.5%, the GDP growth that is. And that's the word coming in from renowned economist Nouriel Roubini. In a conversation with Lata Venkatesh, Roubini also warned against fiscal slippage and pointed at the rise in India's long-term interest rates on the back of fiscal slippage as a concern.
Budgets are very big events in India because they are policy announcements by the government. Now, one of the normal debates is, should the government increase the fiscal deficit and invest so that it can give growth a leg up? Would that be your advice?
My advice will be that, first of all, the budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level. And therefore fiscal prudence is necessary, and the risk is that even if you wanted to do a fiscal stimulus as a way of boosting economic activity, what you have observed in the last few months has been the long-term interest rates in India have gone higher, and have gone higher not just because of global factors, but more importantly because there was a concern that the fiscal deficits are too high. And even with the RBI marginally cutting policy rates, the impact on long-term interest rate has been just to slow down the rise of these long-term interest rates. And therefore, any positive impact on economic growth coming from a meaningful fiscal stimulus is going to be undone by a potential rise in long-term interest rates that's going to crowd out that recovery. Of course, the country is facing fiscal challenges also because when oil prices were falling, that reduction in oil prices were not transferred to the retail level, and it led to greater revenues for the government that were spent rather than saved in the good times. And now that oil prices are going higher, either you increase oil prices to maintain the same revenues, but if you do that politically a year before election, that's not something that's going to be appealing, and therefore the revenue is going to shrink and the budget deficit is going to be rising. That requires fiscal prudence, because otherwise you're going to have increasing long rates. Probably the way to square the cycle that you don't want to cut spending and revenues are falling and you don't have a larger budget deficit will be more divestments of state-owned enterprises and selling to market and partially privatizing some of those assets. That will be good for the economy, and it might be loosening up the budget constraint that the government is facing.
Oh, well, you've just got a fan in the Reserve Bank of India with that answer, I must say. Well, a final question. The other problem, the other debate that's constantly in India is the fate of our public sector banks. Up until recently, about 75% of the banking system was dominated by public sector banks. Now, of course, because of partly government policy and partly economic growth not coming good, we've seen them with a large number of bad loans, default loans. What would be your advice to the government of India? Privatize what is a good proportion of the banking system that may be with the public sector?
Well, the first observation is, of course, part of the weakness in private, but even in public investment in infrastructure has been driven by the fact that you had a problem, a double problem. One, the banks having a large amount of non-performing assets and loans, especially these private sector banks, and then some parts of the corporate sector being loaded debt with too much debt that they could not pay, and therefore that was a situation that froze the ability to produce and invest. A good news has occurred, as you all know, is this passage of a new bankruptcy law that's going to allow essentially to clean up the balance sheets of the corporate sector, sell some of the assets to other investors, domestic or foreign, and then put them at work. Second thing you have to do on the other side is you also have to recapitalize these banks to make sure that then they can lend again, and that process is occurring. So that over time in the next 12 months is going to lead then to some positive creation of credit growth and ability to do more investment. But the reality is that there is no real strong fundamental reason for the public sector having a significant role in bank intermediation. If you don't want to fully privatize these banks, you could reduce your share from a controlling one to a maybe strategic minority share to essentially partially privatize these banks and give them operational and financial independence so they can pursue maximization of returns, so that they are, even if they are publicly owned in partial term, they're subject to budget constraints and incentive like a private firm. So full privatization maybe is unlikely, but partial privatization and having this independence to pursue what's right should be the right thing to do, and maybe there's a possibility that India is going to go in that direction, and it will be certainly positive to make sure that the problems of the past of connected or connected lending and excess of credit and political distortion and the credit allocation are things that are not repeated again as you clean up the balance sheets of the corporate sector and of the banking system as well.
So one advice to Prime Minister Modi?
The advice will be that he has started the process of a variety of economic reforms. More need to be done, and the more those reforms occur, the more chances are that potential growth of India goes from 7% to 7.5%, from 7.5% towards 8%. But to get to 7.5%, 8%, current policies probably are not sufficient, but more needs to be done. And if he wants to pass to history with the legacy of having changed for the better India, definitely he should be continuing with the same policies in the near future.
This is Business Saturday on CNBC TV18. Now, another set of numbers that came by yesterday post-markets were from IT major Wipro. Posted a weakest set of earnings in the third quarter. Revenue was the key disappointment. Kritika Saxena, she caught up with the management of the company and began by asking them to detail their third quarter performance and what they expect from the next quarter. Here's a slice of that conversation.
There's industry matching growth rates, and I'm still confident that, in Q4 we should be able to exit on a quarter-on-quarter basis with industry matching growth rates, because we do believe that the transformation that we are undergoing at Wipro for some of the company-specific aspects, all the heavy lifting has been done, and I feel very optimistic, whether it is on mining, whether it is on localization, whether it is on digital deals, whether it is on some of the consulting business that we have focused on. Our top accounts have shown over the last 4 quarters 2.9% CQGR on an average. 3 of our 6 verticals have shown above company average growth this quarter. All of the service lines have delivered positive growth. We see good traction in markets. The LATAM business has grown about 10% plus quarter on quarter over the last 4 quarters. So all the indicators that do show that, the Wipro specific, our India and Middle East business that we were restructuring, the restructuring is pretty much complete. There will obviously always be something or the other in the environment, like the uncertainty we have in the healthcare and ACA. In spite of that, we've done well this quarter in our healthcare and life sciences business. Some of the uncertainties and political activity that we are seeing in the Middle East, and our largest market there is Saudi Arabia. So those things will continue, and I think that will play out for all the players in the industry. So I do feel quite optimistic about next year.
Abid, will FY19, do you think, be better than FY18 then? And what's your perspective on the demand momentum? Has that improved in FY19?
Yes, so I do believe that FY19 is going to be better than FY18. And as we talk to customers, just a year back when I was talking to customers around this time, there was a lot of uncertainty. Brexit has just happened. The US elections had just completed, and people were waiting and watching as to what happens. At least now there is a better clarity on some of those things, which is improving the decision making. In the US, which is our largest market, there is the tax law which has been passed. So there is a level of optimism, there is a level of certainty, which I do believe will create deals. Also on the technology transformation front, last year most of the customers were experimenting with digital. They were looking at what technologies to use, which part of their business they should apply digital, what will be the organization structure, where the digital spend will go. A lot of that in the customers have also been finalized, and there is a better level of decision making that we expect to see next year. So I'm optimistic for FY19.
Optimistic for FY19, that's the word coming in from the management of Wipro. But let's take a look at the world markets. Then Wall Street, that one ended at record highs this week. But despite that, the US government funding set to lapse temporarily as the Congress has failed in its last-minute efforts to pass a spending bill before midnight deadline. S&P 500 as well as NASDAQ ended the week at record highs. But what's the way forward? Well, we have CNBC's Contessa Brewer, who brings us all the action from the Wall Street.
U.S. markets finishing the day slightly higher. The Dow rose 53 points, the S&P up by 12, and the NASDAQ added 40. Consumer sentiment fell in January despite optimism over tax reform. The mid-month reading of U.S. consumer sentiment coming in at 94.4, moving farther away from the decade high reached in October. Amazon Prime members, watch out. The company announced today prices of Prime monthly memberships will rise nearly 20%, from $10.99 to $12.99 in the U.S. The new price comes in at about $156 for the year. Meanwhile, the annual membership option remains at $99 for a year of Prime. Panera Bread petitioning the Food and Drug Administration to define what an egg is. The fast casual chain claims a number of its competitors, including Burger King, Taco Bell, and Dunkin', sell egg patties that contain more than 5 ingredients. Panera has long been getting rid of artificial ingredients and preservatives from its menu.
Let's get in some political news then. In a setback for Arvind Kejriwal's Aam Aadmi Party, 20 of its MLAs face disqualifications. The Election Commission recommends to the President that these MLAs be disqualified for holding office of profit. The Aam Aadmi Party says it will challenge this in the High Court. In fact, Network 18 caught up with Saurabh Bhardwaj, the spokesperson of the Aam Aadmi Party, and he termed it as a desperate measure by the EC chief before his retirement.
We were being told by other sources that, the central government will try to do this before Rajya Sabha election. However, they could not disturb the government, and 3 of our MPs are going to Rajya Sabha. Probably this is a desperate effort by the central government through a Gujarat cadre IAS officer, Mr. Jyoti, who has served Mr. Modi in Gujarat as a principal secretary, as a chief secretary. On Monday he is retiring from his post. It is the last desperate attempt of Mr. Jyoti to try and disqualify AAP MLAs on this Friday. We condone it.
Okay, then sticking with the news from the national capital, several high-end shopping enclaves in the upmarket South Delhi like Southex and Greater Kailash saw shutters come down. This as shop owners in these marketplaces went on a strike in show of solidarity with other markets where the South Delhi Municipal Corporation is sealing those shops and outlets for unauthorized constructions. Our very own Rituparna Bhuya visited some of these markets and he brings us the ground report.
South X1 market right in the heart of Delhi should have been buzzing with shoppers today. But as you can see, all the shops are shut. That's because traders here in South X1, as well as Defence Colony, as well as GK1 and 2 markets have downed their shutters to protest against the sealing drive that is ongoing at the moment.
That's because of a day-long strike called by shop owners and shopkeepers in this market to protest the South Delhi Municipal Corporation's drive to seal shops and outlets in various markets like Defence Colony and Meherchand Market. As you may remember, the SDMC started sealing shops under the supervision of a Supreme Court appointed monitoring committee at various markets on the 22nd of December for alleged illegal constructions. Traders have also been asked to pay user conversion charges of 22,274 rupees per square meter, which will allow them to use areas designated as residential areas for commercial purposes. But the striking traders alleged discrimination in the levy of this charge, saying the user conversion charges in shopping complexes in residential and industrial areas were much lower.
In residence, you are charging 6,000 rupees for conversion. In commercial or industrial areas, you're converting about 10 to 11,000 rupees. In market, which you are charging us 22,000. Why?
In Defence Colony, which was set up in the early 60s, the sealing drive took place at outlets and basements on the first floor and the second floor. Many shop owners add that they have, in the past, regularized basements for commercial use, and even these are being sealed.
हमारी एलएनडो की मार्केट है, हमने आपको एलएनडो लेटर्स दिखाया है कि दिस इज कमर्शियल मार्केट. यदि सपोज नहीं भी है, तो then we are ready to pay.
For now, these traders want the municipal corporation to stop the sealing drive till these issues are sorted out and allow establishments to continue doing business in the interim. They warn that more traders from other markets will join the agitation if the sealing exercise continues in what they call an arbitrary fashion. In New Delhi, with Rituparna Bhuya, Kritika Saxena.
All right then, with that it's a wrap on this edition of Business Saturday. Stay tuned to CNBC TV18, a slew of weekend shows coming up next.